ladies and gentlemen. Welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. In today's webinar, ladies and gentlemen, as it's the first webinar for September after our summer holidays, we're going to talk about momentum trading. Basically, the whole month of webinars is connected to momentum trading, as it's a very important part of the market right now. Talking about the market right now, in recent months and the months to follow, we're seeing that momentum is playing a very large role when it comes to daily trading on larger time frames or on small time frames. So basically, in these four webinars, we're going to look at two separate systems in two parts, where we're going to take a look at two different systems which are going to be on 4 hours in daily charts. So we're going to talk about several other systems which will be involved with smaller time frames between 15 minutes up to 1 hour. All of this will give you a very good advantage when it comes to today's market. Looking at these charts, right now the presentation will be on the euro versus the dollar as a preferred currency pair among traders. We're going to be using today the momentum indicator, which is in the MetaTrader 4, specifically the momentum indicator, the so-called momentum oscillator. Now, when it comes to momentum indicators, there are a lot of them, especially there are those that we've already talked about, but we've been using them as volatility indicators mostly when it comes to shorter time frames. However, the momentum indicator gives you a better advantage over a larger time frame. What I mean is the specific settings and the specific formula that the momentum indicator uses to measure price movement for such underlying currency as the euro in this case. But before we actually move forward, let's take a look at the indicator itself, or the oscillator. First of all, as a default settings, let's just reset them to see how it looks when you first open it up. There are no levels whatsoever in here, so basically this is what you're going to see when you open it up. Parameters right now, there are two ways of using the momentum. Basically, one momentum on top of another with two different periods, or a single momentum indicator as well. I will show you first the simple system. Later on, we're going to talk a little bit about the dual momentum indicators, how you can use them for filtering out false signals, so on and so forth. First of all, we're going to be using a 30 period for our slowing momentum. I'm going to go for red color as it's faster, so we're going to take the red first. For levels, we're going to definitely need the 100, sorry about that, the 100 level. I'm going to be using white levels on it, and this is particularly how it looks on your charts. It's a very neat single curve oscillator. Speaking of the momentum indicator, also another member of the oscillator family on the technical indicators setup of the MetaTrader 4. The measurement that it takes to attempt this particular oscillator is behind price movements for the underlying currency, as we mentioned earlier, over a period of time. So basically the period of time that we're getting this stage is the 30 period, or the 30 last 4 hour candles. Okay. The usage of this particular index is to determine the overbought and oversold conditions and the strength of the prevailing trend. Speaking of which, overbought and oversold conditions, we can automatically assume that it's very good to be used along with the relative strength index. Of course, this will be in a separate webinar where we're going to talk especially about the combination of these two. Furthermore to that, the momentum indicator is, as we mentioned, classified as an oscillator since the resulting single curve fluctuates between the values of 100, which of course may or not may be drawn on the indicator chart, but as we chose to have it on it is particularly to see our trigger points in our future system that we're going to be talking about it. Of course, occasionally there is a particular way to use it additionally with a smoothened moving average to enhance the value of the trading signal. But we're not going to be using with a smoothened over moving average over the indicator itself. However, we are going to use two separate moving averages over the general chart in order to gain advantage on the market and see whether the price is above or below those two. Particularly, one most important thing about the momentum oscillator to know is that it also shows the direction of the current short-term period trend. Now, in general, we can use it for the 4-hour chart time frame or for the daily chart. As you can see over here, it's a little bit choppy. One more time, if we have to shrink it in a little bit, now we can see that the general trend here, which was to the downside, began over here with the breaking of that 100 level. That is why this particular level of 100 is so important to us, because every time it bounces and stays below this level, we can see that a current trend is going to appear, and slowly the momentum is going to be starting to build towards the downside, or the also called oversold level, until it reaches extreme conditions from where it will start rising again, which is, in other words, the momentum will start slowing. So in both directions, north and south of this 100 level, we can see a directional momentum increase. Whether it's bullish momentum or bearish momentum, it is still momentum increase. The closer the curve gets to the 100 level, the smaller the momentum becomes, or it's slowing down. But when it triggers the beginning of a new trend, short-term or long-term, we're yet to find out, with the continuation of time and the build of this momentum, is the particular way we're going to be using it. But to be absolutely sure in which direction to trade, we're going to be needing two additional moving averages to show us whether the current signal will be valid for us to make profits. When it comes to take profit and stop losses, we will be using a ratio 2-to-1 or 3-to-1 risk reward, meaning, let's say you want to take a profit of 100 pips, then you have to risk 200 or 300. When it comes to me personally, when I use this system, I'm going forward 2-to-1 ratio, which doesn't necessarily mean that I have to choose the 100 profit reward and 200 pips of loss reward. I would go for something more intermediate, like 80 pips reward to 160 loss. That would be something appropriate, between 80 to 100 pips of profit to 160 to 200 pips of loss, stop loss on the matters of 4 hours and daily charts. This is what is, by my opinion, absolutely appropriate. How is that possible? Let's take a look by adding the additional, first, the 100 exponential moving average, essential to our trading, which will be our trigger point. Our earlier indication will be the 50 moving average, therefore I'm going to go for red again here. And what we'll be looking for in this stage will be not the crossover particularly between the two moving averages, but basically the side of which the price is in the direction of the curve on the moving average. Having in addition to the momentum, this will give us larger clues on when exactly we're going to be entering on the market. Now, specifically, as we can see, the momentum indicator is entering negative territory here. Negative, I'm saying, because it's going below the 100, and it's somewhere around the buildup of these candlesticks over here. But our trigger and our entry point is on this candlestick once it closes below the two moving averages. Basically, that's what our rule is. Firstly, we're looking at the direction of the momentum, and second of all, we're looking at the place of the current price, and of course, closing below the two moving averages. The first indication is a large momentum bar, or candlestick in this case, closing below the 50 exponential moving average. The second one is closing below the 100, which is our entry point, because we know that once these conditions are fulfilled, we have our price below the moving average, we have our price or momentum below the 100, which is going to slowly start building up until it cools off and brings the price in the opposite direction, tests the resistance in this case with the two moving averages, and then decide whether it's going to stay above or continue further down. When it comes to profits, the only way we can rely on this strategy to make us sustain profits in the future and protect our assets, of course, that would be the fixed, for me, 2-to-1 ratio, or that would be 2 risk, 1 reward. Now, I would take, in this case, 80 pips of rewards and 160 pips of risk. That would be the ultimate condition under which I would be trading this setup. Why is that? First of all, we're going to measure in this case what is the condition here. Later on, we're going to start moving backwards and track on and see what the system is doing, how the conditions are fulfilled. Now, first of all, we can see that this large buildup here, we might not be able to catch it directly, but let's say we're quick enough to enter the market on these conditions to get an 80 pips of profit. That would be over here. Now, I'm saying I'm not going to go for more than 80 pips, let's say 100. Okay, in this case, we're catching it straight there on the bottom, and 200 pips way above there. In this case, it's quite all right. We might be able to achieve it. However, we're not really sure how far this momentum will go as far as we're concerned into reward and risk in this case. Therefore, taking a more of an intermediate approach would be more appropriate and more conservative, less aggressive, of course, and this is what we're looking for when in terms of 4-hour charts. Daily charts is also preferable. I would stick to the 4-hour charts. It's going to give me more signals in a matter of 1 week time. We're looking at about, what, pretty much every second, third day to an appropriate signal on single currency pair, which will reward us with, let's say, 80 pips, or we're not sure whether we want to take the advantage here. I would definitely enter on this one because once the price closes below these moving averages and we see that the momentum is building towards the oversold conditions, I wouldn't hesitate to take my advantage, because the earlier I enter, the earlier I'm going to collect my profits and wait for another signal. Now, this signal clearly comes over here. As I mentioned, we're not interested in the crossovers of the two moving averages, as it's just a confirmational BS taking into account on a later stage, okay? And I would want to take that opportunity from here to give me these profits. As you can see, this is where the 80 pips of profit is. And if I want to wait to the 100, it's way over here, and it's still not in my pocket. So the market is currently over here, so I have to wait all that time until I collect my profits, only for 20 pips in addition. And why would I want to do that? Instead, I would collect, let's say, on a one lot traded, 80 pips is $800. I'm going to take it in, use that amount into another currency pair, for example, and then make another investment, and keep going forward, find another signal, because this is just a single currency pair on which we can rely. But then we have the GBP versus the US dollar, then we have the Japanese yen, the USD versus the Japanese yen as well, many more major currencies, commodities, indices, so on and so forth, to which you can use this particular system. However, what I've seen that it works extremely well on is on high volatility pairs based on our risk-reward ratio. One more time, it's extremely important. 2-to-1, recommended, 80 pips profit, 160 pips of stop loss. That would take you a long way towards increasing your balance. Let's take a look at another case. As we saw what the market is doing, we can see that in this case we're collecting these 80 pips here. The market is returning below the 100 level of the momentum. So in this case, we might even consider closing these positions, probably in a bit of a loss here. Still, it's quite all right to take that. It's not necessary to wait for the 200 pips of stop loss to be hit. That is also a precaution which less aggressive, more conservative traders would take as an approach. Also, it's a good recommendation I can give you, that when we enter here on the closing of this bullish candle, on this one, we take the profit here, or if we didn't manage to do so and we have set up 100 to 200 risk reward, then we're going to be closing it at about 12 pips of loss, which is not that much. On one lot is 120, which we can conceal without a problem, instead of risking $2,000 on one lot in order to get 1,000 on a profit, which might not even come, because we can see that the momentum is changing direction, which ultimately brings it into a sideways direction, and we're not interested in this particular move. Moving backwards here on this short-term uptrend, as we can see, the momentum is negative over here, and in a case like this one, which the market breaks the two moving averages, enters into negative territory on the momentum, but it's very quickly getting to oversold conditions, not enough for us to make additional profits. But in here we have the chance to make amends, basically, closing it on about a 56 of pips of loss on this one, but then taking the opportunity to make our 80 pips over here on this candle. As we can see, the market is moving in our direction pretty much. The two pips will eliminate each other and even leave us with another 40 pips of profit, or $400 equal to one lot of trading in two trades. On this condition here, we have also the same opportunity. As you can see, the momentum is breaking up to the north of the 200 level of the momentum. The conditions are met. As you can see, the large bar breaking through the two exponential moving averages, giving us this 80 pips of profit. As I said, 100 is also good, but it's a little bit too risky, because most of the situations you are not going to be able to get that 100, instead hitting your stop loss, which will get you too far back on your progress. Therefore, 80 to 100 is much more appropriate. And what we see here, the 80 pips of take profit is somewhere in this large candle and not even close to our stop loss if it wishes to return back down. On this case here, we can clearly see from where we've come that it's sideways direction. In a lot of cases, this is also working quite all right. But in sideways direction, as I mentioned, we tend to close positions on a little bit of loss quite a bit too often, because the momentum indicator will be hovering around this 100 pip range, where it will just be hitting a few of our unnecessarily closed positions, not a stop loss, because as I mentioned, once we see that the price is moving down here below the two moving averages, we have our momentum down, we have no idea whether it's going to be going down or it's going to reverse higher, so we're going to be taking our chances. And in this case, just a few pips of straightforward 80 pips of profit. Our 160 is way over here, far away, so even if we have to wait, it's not going to be hit even over there. And we can still conceal our profits, multiple options here as well as this condition here. We can also take it as an advantage. You can see 80 pips of profit is absolutely appropriate in most of the cases that we face on the market. That case here, I don't even have to talk about it. It's let me center it out for you. We can see the large candlestick breaking down, bringing the momentum to south of the 100 level. Let's say we enter on this one, we can still conceal a pretty good 80 pips of profit, even on the next candle following this one. And our 160 is way over here, protected. Multiple cases, also we can see the momentum up, the price is attempting on the upper side of the two moving averages. Still, we have the chance of concealing these profits with the next few candles, which is our 2 sessions of 4-hour charts. That's why I've chosen the 4-hour chart. For me personally, it works well because in most of the cases, 60–70% of the cases, I'm not waiting longer than 2–3 sessions. That's about 1.5 days, for example, to conceal that particular profit, which is pretty good. Also, same conditions, price breaking down below the two moving averages, momentum is down below the 100. We can short positions here. You can see over here, that's a few days, 2–3 days maybe even 4. Our take profit is hit. Our stop loss way above these two here, you can see, which is pretty good. Same case here on this one. However, this candlestick is very, very large, same in momentum like this one. So we're either going to risk taking this opportunity. Still 80 pips, as I mentioned earlier, is a very good profit that we have to consider as an intermediate reward to risk ratio. So we're taking that profit here as well, even on this candle, as you can see on the shadow here, and the tight spread on the euro dollar is actually going to give us even larger advantage on the market, concealing profits much earlier. Therefore, as you can see, 160 comes way over here, but we already see that the market has changed direction. So even if we didn't manage to take that and we are more greedy, we can still close it down here on a smaller loss of about 80 pips instead of 200. So still, the momentum indicator, as I mentioned, is a very good oscillator. It's protecting you from losses. It's protecting you from sustaining any kind of large losses on your account. It can actually prompt you to cut your losses short instead of waiting for your stop loss. It's telling you, do not be so greedy, cut your losses short. So far to the profits, as I mentioned, it's very good to achieve the 80 pip profit to 160 stop loss, because in most of the cases it's going to give you larger profit instead of waiting for another 20 pips, but instead hitting that stop loss. It's going to demote you to tell you that probably the system is not for you. But as I mentioned, do not be so risky with the system. Be more conservative, using the appropriate levels as I mentioned. In this case is a fail-safe. As you can see, the momentum is breaking up. The 200 and the 50 are well above the price on this level here. Even in this case, we still don't have a confirmation above there, and we're getting it over here when we mentioned about this particular case. Here, this case is particularly interesting that we can talk about it. We see the momentum, ladies and gentlemen, breaking below the 100 level. The price is still there, so it's not giving us any opportunity until it actually comes way over here and starts closing below these the 100 and the 50, the two exponential moving averages, from where we can still short for the 80 pips of profit. You can see still just not a few pips of enough to get that 200, the 100. So one more proof that the 80 to 160 is more appropriate in this system. So we're considering this profit, and as we can see, the price continues to move below the 200s. We see the momentum continues to move down, so that's a very good indication of short to mid-range downward trend, which we're actually going to take it with. If you are intermediate to a more advanced level of a trader, you know that the trend is going to continue for another 2 or 3 waves. So you might even add to your positions, or just enter here, take profits here, enter here, take profits here, and so forth. Again, the 80 pips of appropriate, you see over here on this candle, 1, 2, 3, 4 candles, and your profit is done. Another case, of course, I wouldn't take this one because I can see that the momentum is going further down and might even start reversing before it hits my take profit. But then we see the same wave continues to move down. Another 80 pips of profit over here, another 80 pips of profit over here. So we can safely say that the system is quite reliable. I'm using it for quite some time on volatile pairs. Of course, as it comes with any technical system, it's safe to say that sometimes it could fail on a large scale by hitting your stop loss when it comes to large announcements, but every technical trader knows that he's got to stay away from larger announcements. You know, when volatility, high volatility is expected, let's say European Central Bank announcements, interest rate decisions, Federal Open Market Committee minutes, so on and so forth. All of these conditions can actually fail the system. But it's, one more time, safe to say that the system is quite all right, very neat, very profitable. It gives you a lot of time to see what the market is up to when it comes to current market conditions. As you can see, our 80 pips of profit is achieved here on this case. Also, we have the opportunity for multiple entries. However, this is a too steep trend, which prompts us that it's going to be falling short. And the reverse head and the head and shoulders formation here is telling us that 100 pips of drop is expected soon. And as you can see, 100 pips definitely before the sideways direction, before it actually prompts us for another move to the downside, where is more appropriate to enter. In these cases, ladies and gentlemen, we can see that our system in this case is providing us with very good opportunities. And so far, until present days, we went back until 22nd of April this year, which gave us only one stop loss hit. Well, I would say that the system is pretty good. We went back about, what, 6 months, something like that? and so far it's pretty good. And even if we keep going backwards and backwards, we can see that the system is going to provide us with further good results when it comes to trading. And as you can see, 80 pips, another one. Here, however, on this case, the system is protecting us because you can see the price in the channel between the two moving averages. Even if the momentum is down, it's still telling us stay away. In this case, here, this is also an opportunity. It doesn't matter that the price went down here, it's just testing it, but the momentum stays positive in the bullish direction, so we have our profit on this case as well. Well, ladies and gentlemen, multiple opportunities on one currency pair. So far we've tracked about 10, 15 opportunities, I would say. Let's make them 10 for the past 6 months with only one lot each time. And that would be about what, $8,000, I would say, on these 10 positions average. Which gives us more than $1,000 of profit, $1,500 of profit each month, only one lot. Imagine if you can trade with 10 lots. Well, it's safe to say that you would be making about $10,000 every month, which is a pretty good salary, I would say. And for 10 lots of trading, you only need about $10,000 on average to trade this particular currency pair. Now there are commodities and indices that you might need larger balance to trade them, but we'll still trading only one currency pair, which is with a tight range, will still deliver pretty good results on your trading balance, which I would say with every intermediate average person would say that $10,000 a month of salary is pretty good. That's about it. Well, I hope that you liked it. I hope that you might be able to use it to incorporate it into your trading plan. If there is something that you don't understand, if there is something that you need to ask, the only thing you have to do is go on our website. On your bottom right corner, you will see a pop-up chat with our support department. All of your questions will be answered straight over there without delay. Also, you can use the phone numbers to dial us directly if you have an emergency, or request a meeting with me so we can clarify more questions that you have from a technical or fundamental standpoint of the current market conditions. That's all about today's technical system. I'm going to see you on Friday again with another momentum indicator, which is also going to be involved with time frames on the matters of 4 hours and daily charts. We will see what new we can use for different individuals. And of course, meanwhile, if you have any questions, you already know how to get in touch with us. Also, if you like what you see and if you like our services, you can always recommend us, or you can go to Facebook, like us, rate us, comment, do whatever you think is appropriate at this stage. Thanks for joining us. I'll see you on Friday, same time. Bye-bye for now.